Good morning, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. This is Morning Forex Technical Report, so let's get into it. Before I start, let's talk a little bit about the CPI. It rose by 0.1%. That was less than the 0.2% expected. The year-on-year came tumbling down to 5.0% from 6.0% from the prior month. That is because we dropped out a 1.2% increase from a year ago out of the equation and replaced it with 0.1%. So that's a difference of about 1%, and that's how much the year-on-year measure came down. The core measure was not as friendly to the CPI. It rose by 0.4%. This is a core X food and energy. The year-on-year came in steady at 5.6%. What is important in core is the cost of shelter. If you took out shelter and rents, the core measure would have been unchanged, but the shelter rose 0.6%. Shelter accounts for 33% of the core measure, and that is a 33% of the total CPI inflation. So that has continued to keep the measure of the core inflation higher as other prices come down over time since the run up from commodity prices and so on and so forth from the supply chain shocks and all that. So the economists and all those pundits out there keep on saying that the shelter costs will come down over time. It has to do with the way they calculate the delayed tactics of incorporating declines or steady rent increases are not being impacted for 3-6 months, even longer at a time, and they expect those levels to come down, but they haven't. Every month that goes by, we get 0.6%, 0.8%, 0.9%. This month it was 0.6% for the shelter cost, which is lower than last month, but still 0.6% increase. If they start to come down more quickly, we could see the core, or we'll see the core measure of inflation come down along with it, and that would also lower the headline number as well. So that's what to look forward to, but we still haven't seen it yet in the CPI data. So let's take a look at some of the technicals that are driving the currency markets. We'll take a look at the euro versus US dollar first. The US dollar is moving lower after the data. We saw the euro versus US dollar move above this swing area. Up through here incorporates different lows and highs going back in time. What started way back here in 2022, where the market first had a floor and then had a ceiling before moving to the downside. We didn't return to that area until the month of January, where the price came up to that level, fell off, and then moved above it early February, and then reestablished resistance against that level before moving lower through here. And it was in the month of March where the market returned to this level once again, finding resistance sellers against the level again before breaking above it in early March for 2 consecutive days here, and that failed. And the market moved back down before moving to the upside the last 2 days. And breaking above that level and trading here today. So the 109.43 is the close support level. Below that, 109.25 is the lower end of that swing area. If we move below both those two levels, then the buyers will be disappointed and likely to push the price further to the downside. Alternatively, what do we have to look forward to on the top side? Well, if we look at the high prices from early February, the high price on February 1st reached up to 1.1000. That's 110, nice round number, natural resistance level. That's the next target on the top side. The other target up there comes in at 1.10317. That's the high price. Cycle high going all the way back to this April or March of 2022. So those are the key targets on the top side. So for the euro versus US dollar, we got to stay above the 109.43 level. If we're able to do that, then the bias remains to the upside here for that currency pair. Let's take a look at the dollar versus yen. I'm going to take a look at the hourly chart for that currency pair. And what we see in that move is a sharp move to the downside, which took the price right to the 100-hour moving average. Didn't mean to do that. I meant to put a nice little arrow there, but do it again. There we go. The 100-hour moving average at 132.72. Our low price came just below that level before bouncing back to the upside. We're currently back above the swing low from yesterday's trade, which came in around the 92 level. So currently trading 133.03. as I type. So if the price is able to stay above the 132.96 level, we could see further probing back to the upside. But on the sharp move to the downside today, we did come back below the 100-day moving average of 133.318. So I would expect that sellers would lean against that area as we move up toward it and rotate back to the downside if the sellers in the U.S. dollar to continue that trend to the downside. In the U.S. Treasury market, we are seeing yields move lower after the report. The 2-year yield is down around 12.7 basis points. The 10-year yield is down around minus 6.2 basis points. So that is contributing to the downside here. By the way, stock prices are also higher, with the NASDAQ index now up 112 points and the Dow Industrial Average up 161 points and the S&P up 24 points. So that is also helping to contribute to the lower dollar here as flights out of the safety of the U.S. dollar continue. So for getting back to the dollar versus yen, watch the 132.92 level. If we move back below that level, I think we go back and test the 100-hour moving average. Below that comes the 200-hour moving average, the 132.50.5. Let's call it 132.50. Those would be our key targets on the downside to get to and through if the dollar sellers are to continue in that currency pair. On the top side, watch the 100-day moving average as mentioned earlier. The sterling versus the U.S. dollar, this currency pair moved to the upside as well. In the process, moved above the converged 100 and 200-hour moving averages at 124.218 level. Taking a look at the daily chart, this area right through here, which corresponds with this yellow area right through here, is defined by these swing lows and swing highs going back in time. If we take a look at the this low here, these lows right here, this low right here, this low right here, this low right here, forming a floor and a ceiling, I guess, and then we fell below that level, came up toward it, and rotated to the downside through here. It wasn't until the end of the 2022 when the market returned back to that swing area. In January, did the same through here and fell off each time. And in the month of March, the market came up to that level. In early February, moved above the level. And as you can see, we've been waffling above and below the level over the last 4 or 5 trading days. And we're trying to move and stay above that level. Watch 124.22 on the downside as long as the price can remain above that level. I think that the buyers try to push the price back to the upside through here, maybe up to this swing area over here where we have different swing highs through here for the sterling versus U.S. dollar. So watch that level 124.22 up to 122.43. That is sort of a neutral area from a technical perspective. If the price can remain in that area, we could see a consolidation and a rebounce to the upside, or a new bounce to the upside that would take the price higher. If we move below that level, then all bets are off and the bias shifts back to the downside. So there you have a look at some of the major currency pairs after the CPI data and a little talk about the CPI data. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.